What's up, guys? It's your girl Shay. So I am doing this video in reference to a post that I made on my Facebook with the stock market and how it was like the best investment that I made. And I saw that a lot of you guys didn't know anything about the stock market. You wanted to get in. You wanted me to teach you. Well, I'm just letting you know I'm not a professional. I just started this last year, really knowing nothing about it, and kind of like teaching myself a little bit. So whatever I'm gonna tell you about, don't think you're gonna like just know everything off of the little bit of stuff that I tell you. So I'm not a professional. Don't come back after me with any problems that you have. I can just teach you as I learn myself, because I didn't really have anybody teaching me. We were just kind of like in this together. So if you need more help, get you an accountant or CPA, but this is just ways that I can explain to you on like broken down, just kind of like a simplified way of learning the stock market and how to take baby steps into it. So first off, you have the stock market, you have a platform, right? Well, the platform that I use is Fidelity. Now they have Robinhood, which the only time that I use Robinhood every day only to watch the stock market. Robinhood is good for live updates. I do not invest with Robinhood because Robinhood limits you to set limits on the price that you want to sell your stocks for. But let's start with the basics. I use Fidelity. Okay, so the basics is you have your stock market. The stock market is, I wrote it down, y'all. So the stock market is the market in which you buy and sell partial ownership, also called shares. So partial ownership or shares of a business. Okay, so it's the market in which you can buy shares or partial ownership of Tesla, Netflix, real estate. Like there's so many different things out there. Gold, gas, there's so many different things out there. But let's just talk about Netflix or Ford, the Ford Motors, right? So the stock market is the market in which you have different companies, Ford, Netflix, Tesla, in which you can buy partial ownership or shares of that specific company. Okay? A stock, right? A stock is partial ownership of a company. If I buy a stock, I am buying partial ownership of that company. Okay? A share is the number of pieces of the company that you purchase or sell. So a share is the number of pieces of that company that you purchase or sell. So if look at it like this. There's Walmart. There's the whole company of Walmart, right? So you can buy little pieces, shares of that stock of that company, okay? So you can buy pieces of that company. We're going to go with little numbers. Let's say that whole company is $10. We're just starting little. Let's say the whole company is worth $10, right? And you want to buy a piece of that company. And that piece of that company, they are selling one piece for 1 penny. You want to buy 100 pieces, 100 shares of that company, 1 penny each. That's 100 pennies, right? So a whole $1, right? Are you getting it? So we have the whole company of Walmart. The whole company is worth $10, okay? They are selling pieces of that company to people like me and you for a penny. You want to buy 100 pieces, 100 pennies, 100 cents, a whole dollar you are purchasing from that company. When the profits of that company raise, so let's say that company raises profits of 100%. So you take that $10 of that company and it raises 100%. That company is now worth $20. Okay? That company is now worth $20. You bought one share. Let's just say you bought one share for that penny. Okay? You paid them, hey, here's my penny. I'm going to invest my penny into you. I want you to hold on to my penny. I'm going to invest it so I can just own a piece of your company. And when your profits go up, when your profits go up, the investment that I made in your company is going to go up too. Your profits just went up a whole 100%. So the penny that I invested into you is going to go up 100% too. 100% of a penny is two pennies. Okay? That's just simplified. So, let me go back to my notes. So then, for example, in the stock market, there is a stock for the company Ford Motor. One share for that company it was at the time when I wrote this, one share for that company is $6.80. Now, we know Ford Motors is worth millions and millions and millions, however much they're worth. Right now, they're selling one part of that company, one share of that stock. You can buy a part of that company for $6.80. Okay? $6.80 is the price for that one share of the stock of Ford Motor Company. If I buy 100 shares, 100 pieces of stock Ford Motor Company, I would have invested $680 into that company. From my $6.80, if I buy 100 shares of the $6.80, I would have given them $680. Okay? So now I own 100 shares. I gave them $680. Whenever their profits go up, whenever they start making more money, the percentage that they are making is the percentage that my investments is going to go up. It doesn't matter how much money I invested, no matter the price or no matter the amount, the dollar amount that they have, I will go up or go down the same percentage that they are, right? So if they are going up 100%, if their profits go up 100%, my profits go up 100%. If when I buy that share, their profits go down, my profits go down by the percentage. It goes up the same percent, down the same percent. So some people do day trading. You can start small too. They have anything from penny stocks to things that are thousands of dollars. So, and when I say this $6.80, I wrote this for somebody a couple months ago. So the price is now like $9, $10, something like that. So if you download one of these platforms and just look at a company that you're familiar with, that way you just can kind of learn how it goes. You'll see that when the stock opens up on Monday, the stock market opens up on Monday, it's going to come in at a certain price, and you'll see those prices jump up and jump down by a certain percentage. Okay, so if you just tell yourself, if I would have bought a share when the stock market opened at 9:30 on Monday, because it opens up at 9:30 every day, if I would have bought a share of that company at 9:30 in the morning, let me see if my money would have gone up or gone down throughout the day. Don't just watch it. Watch it for 2-3 weeks, okay? So Once you get to studying these companies, then, and when I say study, you can't just like go in and look at it, because you're never going to know what's going on. You have to actually like kind of dig into these companies and see what good did they have going for themselves. What is the upcoming news? Are they adding new different kind of clothing? Are they collaborating with another company? Like, what's good going on with them, or what's negative going on with them? Or are they signing a bill, or whatever the case may be? You have to kind of do a little bit of research, but go into this platform, Robinhood, just to look at it. And look at your favorite companies, and you'll kind of get an understanding what I'm talking about. But just a breakdown, the stock market is the market in which companies allow you to invest in them, okay? And they sell these things called shares, and you can purchase 1 share, 2 share, 3 share, as many shares as you can of that company or of different companies, right? You can purchase from multiple different companies. And as their profits go up or down, your profits do as well. If you buy something and you see the profits are going up, some people sell. If it's a short-term investment you're trying to make, some people buy a stock, wait for it to go up, sell, get out, and go buy something else where the stocks are low. You got to look at the history, the 5-year history. Buy it. Once it goes up, you sell, but it's not as easy as it sounds. But this is just a broken down terminology for you to be able to understand, something simplified. But just go in, find your stock, find your company, okay? See how much they're selling a share, a part of their company for, and play with the numbers in your head. It is way easier than it sounds. You kind of have to download the app and look and see kind of what I'm talking about. But it's just like this. You buy Jordans, right? Jordans out of the store. You can buy a Jordan and keep it in great condition, and they can become vintage, right? Vintage Jordans. Keep it in great condition. You can sell it for more than what it was worth before. Okay? Or you can buy a pair of Jordans and wear them, and then they lose value, and then you can still sell them. You're going to lose money though, right? So it's kind of like that, okay? You want to buy something at a lower price and sell it for higher. And some of these companies are long-term, just like the Jordans. You know, some Jordans, you can hold on to them and they become like real retro Jordans and be worth more money. Some of them are just team Jordans, okay? You're buying it, you lose money, whatever. You see what I'm saying? So that's the most simplified way that I can just kind of give you an understanding. I hope this makes sense, and if it doesn't, I'm going to rewrite my words and explain it in like more street terminology. But I hope this was simple enough for you guys, and let me know if you get it. Even just a little bit. Did you get it? Just a little bit. Let me know. There's money to be made, okay? Let's get out there and make it. This year, or last year, was the best year for me so far in the stock market. I made like $32,000. There's money to be made. It's just we have to communicate, and get an understanding so you can learn. I can teach you what I know, but this was just the basics. Understanding the terminology and how to be comfortable enough to go in and get even just the slightest bit of knowledge, to feel comfortable, to know what you're looking at. Love you.